Guys, welcome back to DeFi, degens, drip, and farm for poverty. Where on this channel, our vision is to empower the impoverished by helping you find financial freedom through crypto assets. Please subscribe and leave a comment and a thumbs up. Hey guys, welcome back. DeFi, degens, drip, and farm for poverty. So today we got another macro overview video for you guys. I'm always trying to give you kind of the where the space is going, because where crypto goes, then like everything else will follow that doesn't get washed out, right? And we all that are in drip believe BNB will be here. And that means if BNB is here, ETH is definitely here, and that means Bitcoin is here. So understanding what Bitcoin and ETH are doing can help you kind of speculate what will happen to things like BNB. And in comparison, that also means for drip. So in this video, I'm going to be talking about 4 huge macro tidal waves that are coming. One I already announced right here about the BlackRock. How they literally pretty much control the world's monetary supply. If they don't control it directly, their software manages it, that other hedge funds, investment funds, sovereign wealth funds, asset hedge managers, all that stuff, they use this software for the most part. And how they have already allocated or decided to issue a private ETF for Bitcoin. So that gives us some idea about Bitcoin. I'm going to show you some videos regarding the ETH Merge, the stablecoin regulation coming from the United States, and of course, the Animal Farm launch. That's all literally kind of like slotted to head up in September, which is crazy. Not to say that the roof is going to blow off of any of these things. All of a sudden in September, we rip through the ceiling and punch new all-time highs. No, it's just to say that the groundwork is being laid, and that after this cycle plays out, whenever that will be, there's a lot of bullish sentiment and lots of money sitting on the sidelines. And any one of these things, let alone all of them together, is slotted for a massive bull run in the future. Like, again, I don't know how long that will be, but it's a guarantee because these things are coming. So let's talk or listen first to Raoul Pal talk about what he believes is the huge tidal wave regarding the ETH merger or the going from proof of work to proof of stake.
I'm going to make it easy for people. Everything is about supply and demand, right? The more supply there is, the cheaper it is. The more demand there is, if supply is stable, the more expensive it gets, which is why we've had the problem with prices, because there wasn't supply of oil, but there was demand as everybody came out of pandemic. So what have we got going on in ETH? We've got a gigantic supply shock. So what is the supply shock? The small supply shock is right now, every day, miners are selling ETH. They probably sell 80% of everything they receive because they need to pay for their cash flows and their electricity and all of this stuff. So they stop. That's about 1 or 2 billion a month. But then after that, we've also got the fact that staking is coming. Currently, there's about 9% of all ETH staked. Now, estimates are it should go up to around 30%. What does that mean? It means 30% of the ETH comes off exchanges, comes out of DeFi, comes out of CeFi, and is untouchable. Right, you're removing a gigantic amount of supply from the market, and it's locked for a year, so you can't do anything about it. Yes, you can trade using staked ETH and stuff like that, but it's not the same thing. So you've got this. So you're taking that out of the market. So you've got a huge supply shock. On the other side, you've got a massive demand shock, which is firstly, a lot of institutions wrongly didn't like Bitcoin because of ESG concerns. Proof of stake gets rid of that. Additionally, it now has a yield. So that's something that institutions love, is a yield. So now you need to make one asset allocation decision, which is, I believe in this Web3 technology world. So where do you allocate? Bitcoin or ETH? It's going to be ETH. Why? Because you're going to get something between a 6 and a 10% yield. So that's extraordinary. And you've got this deflationary issue of burning the tokens based on network activity. So that's another massive supply shock. So there's less ETH around every year. It's getting locked up, and you've got no miners. Put against this massive demand shock, and we've got the macro cycle turning. I look at this and think, holy shit, this is a massively imbalanced supply and demand situation.
So for those of you that don't know, that's reference to the ETH Merge, which has been planned for like well over 4 or 5 years, and it could be pushed back. Nobody knows, but supposedly this time it is for real and will happen. And basically just means it goes from proof of work to proof of stake, and that will allow for all these things that Raoul Pal is talking about. And that is scheduled tentatively for September 15th or 16th. So this is huge for the ETH community. But remember, ETH as its initial crypto, it was programmable money. Remember, Bitcoin couldn't program; it just was what it is. And ETH came along and allowed you to do smart contracts, which just changed the game for everything. So as ETH, if ETH flips Bitcoin because of this and becomes the leader in the space and takes the market cap lead, then we could see that it then becomes what ushers how the other altcoins play. And that's why I'm saying that BNB could pump as a direct result, because it's clearly a competitor to ETH, just like other layer twos should pump as well. But we don't know. But again, this what he's saying is there will be a lot of capital pouring into the space that are looking at getting a piece of that yield. And if capital comes in, then just by circumstance, they're going to get exposure to other cryptos. Just coming into crypto, same way everybody on this channel probably did. You heard one thing and then it led down the rabbit hole to other things. So that's one way that this tidal wave is coming, possibly in September. And let's look at the next one, which is talking about stablecoin regulation. And for those of you that are unaware, stablecoins, specifically the US dollar, becoming the stablecoin or securing its position as the global reserve currency would mean, again, that people all over the world would be able to send money more rapidly. And Kevin O'Leary goes into details about this. And I even said that on my channel when I was sending money to myself and the amount of headache I would have had to gone through without using crypto, and how people who do money, I forgot what it's called now, but where they send money back home when they work abroad, how they could use stable coins for that. And that would be a huge benefit for the crypto space, because that's billions of dollars being allocated. But this is supposed to happen also in September, but I'll let Kevin O'Leary explain that.
It's a turning point for crypto. That's what I think. Listen, we were supposed to get a policy just on stablecoins reviewed this month. They pushed it, and I'm talking about now on the Hill in Washington. They pushed it to September to consider it. You got to remember, there's Haggerty, there's Loomis, there's Toomey, and Toomey is going to retire in January. He wants to get one piece of policy done. He wants to get stablecoins regulated. And the policy they're putting forward, I've been spending a lot of my time in Washington on these bills. And I'm not the only guy doing this. And I'm totally transparent on my interests here. I want to get some kind of payment system for my global businesses when we're transferring cash. I want to use USDC between here and Geneva. We index. I have an indexing business. So we're constantly, every day, taking US dollars, ACHing it over to Zurich. They charge me a fortune for that. It takes 36 hours sometimes. Then they nip me on the FX trade when I go into Swiss francs and buy a Nestle or a Roche or whatever I'm buying to index it. And then they screw me again on the way out. I could completely eliminate that with a payment system. And everybody knows that. So there's a lot of
So that's him explaining, the utility of stablecoins and why it's super important for someone like him. And again, that just gives more allocation to people in the space. The more money that pours into the space, that's the more eyeballs that come into the space, and the more the rest of the crypto as a whole steps up. And this is just one person talking about money that he can save for his business, and it's like millions. So again, imagine this for the market as a whole, and specifically, it's really important for the U.S. because they are currently the global reserve currency. So even though inflation is crippling the economy, all global trades are pretty much balanced in U.S. dollars. So them taking a stakehold in some kind of stable coin that's pegged to the US dollar gives the US kind of that secured foothold so that it's not created by some other country. So any kind of regulation surrounding stable coins is bullish for the entire crypto space. It may have some negative side effects depending on which stable coin is used and the kind of transparency and stuff like that. But again, more money in the space is good for everyone, especially us in DeFi, because we're technically kind of front running. We're in the space before this money comes in. The more money that comes in, the higher these assets appreciate. And we're listening to talk now about sovereign wealth funds. If you're not familiar with sovereign wealth funds, they're basically money that the entire different countries use for their reserves, or they invest on behalf of the country. So if you just think of the country as like a big company, that's kind of what they're doing. And some of the biggest ones, like Norway, have $1 trillion, Abu Dhabi, 800 billion, China, 800 billion, Kuwait, 500 billion, and then 514 billion. So it's a lot of money. And he explains just how much could come into the space from this. It's not saying all that money's coming in. I'm not telling you guys that, but it's saying that these people are looking to get into the crypto space, and because there's no regulation, they can't, but they already want to. So let's take a listen to that.
Kevin O'Leary, the world-famous investor and star of ABC's Shark Tank, was recently asked in an interview about sovereign wealth funds. Now, these funds, they are the funds of entire countries, and many times they have billions, if not hundreds of billions of dollars in them. And what he said was absolutely shocking. These funds, they want Bitcoin. 1% to 3%, and 99% of them only want Bitcoin. Here's Kevin's comments from this interview.
When I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin, and they want that volatility. I think for financial services, I agree that the gas fees are a joke. That's the problem. This will help solve for it. But if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1% to 3% of a portfolio, a standard. These sovereign wealth portfolios look like this: no more than 20% in any one sector, no more than 5% in any one name. So you're never going to find, Boeing or Bank of America more than 5% in a $900 billion fund. All the indexers know that. It's a really standard format. When you ask them if you could buy a digital asset, which one would it be and what allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end. And 99% of the time they say Bitcoin. That's all they know.
So if you're not familiar with basis points, that's 50 basis points is 0.5%, 300 basis points would be 3%. And like I showed you guys in a previous video about BlackRock, so we can just use this one up here, 800 billion. China probably wouldn't do that, but it's just simple math. If you do 1%, so that'd be 100 basis points, that's $8 billion that they would like to allocate towards Bitcoin. And Kevin O'Leary actually got citizenship in Saudi Arabia and has been talking to their several sovereign wealth funds in Saudi Arabia and giving them advice. And he said they want to get in. And I think they said between that same number, a 50 basis point, 300 basis point. And they are waiting on BlackRock's approval for the private ETF, or to get a globally approved ETF from U.S. regulation. And the reason BlackRock came up in that, it was another video he was talking about, is because the sovereign wealth fund for Saudi Arabia again uses BlackRock's Aladdin software, like I told you in the beginning of this video. So BlackRock getting in is already a bullish sign for money all over the world. And then Kevin O'Leary just kind of stamping that, saying, yes, these sovereign wealth funds are telling him that. And they're talking about what seems like a small allocation, but 1% of 1 trillion is $100 billion. Sorry, $100 billion. That's insane. And that's just, one country. So last but not least, we're gonna go back to Raoul Pal, because he's talking about the entire crypto world being short on crypto as a whole. So, or just the entire financial sector short on crypto, sorry, and what that's gonna do to the space.
It'll be a start.
Everybody in the entire financial world is short upside calls in crypto. Right. What that means is the more the price goes up, the more regulation changes, the more they have to get involved. I've seen a setup once like this before, which was the launch of the GSCI Commodities Index back in the late 90s. And basically nobody had commodities in their portfolio. Everybody went to about 5 to 10% weighting, right? The amount of buying was in the hundreds of billions of dollars. The magnitude of what needs to happen here and the fact that everybody's short means that over time, they all get flushed in. And all the conversations I have are with the biggest financial institutions on earth, whether it's the sovereign wealth funds, the biggest asset management firms, the biggest family offices, the biggest pension funds. I mean, it's on everybody's radar screen. And incrementally, every bit of news you get that's positive on regulation, or somebody like BlackRock showing the way, or somebody like Texas Teachers showing the way, or somebody like Fidelity showing the way, makes people braver and braver. When you look at what Goldman is doing, JP Morgan's doing, I mean, you're giving confidence to more people. All they need is a bit of price action and they'll be in.
Are you looking for
So there you have it. That's the last one. So what that means and why I'm tying that to the animal farm is because any one of these things could be, like I said, that kind of spark that lights this flame. And it doesn't necessarily have to all happen at once. They just need the regulation. BlackRock just needs the approval for their private ETF or whatever, and just needs to allocate a small percent. And it can be done over time. But the minute that is the signal, then all these other players that are sitting on the sidelines, like Kevin O'Leary said, and like Raoul Pal said, they have money. They've been waiting. They've been waiting to get in. Even the big banks like Fidelity, Charles Schwab, and all this have been waiting to allocate this capital. And when they do, 99% of them, according to Kevin O'Leary, will be allocating towards Bitcoin. Raoul Pal thinks that they'll also allocate towards ETH due to the percentage APR rewards. Basically, they can get paid out if they stake that, because they can't get those kind of rewards or payouts in any kind of traditional fund. So either way, any of these going into Bitcoin, this amount of money going into Bitcoin or going into ETH is bullish for the entire space. And that's why I said, like, the September launch is crazy. That if this all lines up, then Forex timed this like a genius, because if we have all the marketing going on in August or through the month of September, and then the macro gets kind of a little positive momentum. I'm not going to say, again, we're going to go to the moon. It's not going to be a bull cycle get started, because we still have the macro environment with inflation and all this other stuff like that. But it can just signal that the bottom was in, and that we'll trade sideways, and there's money coming into the space. So it means that in a year, 2 years, 3 years, however long it takes to add all of this capital into the space, that we'll be able to ride that tidal wave, upwards. And again, being in DeFi and in a project like this is an ROI DApp, that's just super bullish, not to mention all of the additional utility that Forex is adding to his project. Like, in and of itself, like, he's doing a lot of stuff, and the macro environment is shifting like rapidly. So yeah, I'm excited. I have no idea what winter will bring, but if any of these things play out, like I've just shown you guys, yeah, it's going to be one hell of a epic winter. Like Tony Robbins said, some people ski in the winter and other people freeze. And the decisions you made in the fall and summer and spring will dictate what you're going to be doing this winter. So, yeah, hope you guys found that valuable. I like to listen to the much smarter people in the macro space, and at least it gives me some hopium we're going in the right direction. So continue to hydrate, compound, and participate in the No Sell August challenge, as well as the get ready for the scavenger hunt. And please continue to support this channel by liking and subscribing, because that's the least you could do. It helps me out in the long run. And of course, it supports the algorithm. So until next time, lift daily and achieve your impossible. See you guys.